So once again today, silver is tanking, and you've got broader markets as well, which are tanking. And this comes after Friday, which was the worst day in 46 years. So what happens next? That's what we'll be getting into in this video. Potential reasons for the crash, and also what the institutional investors are doing, what the retail investors are doing, because that's all important as well. So I want to first of all just say, please like the live stream. It tells everybody that we're live. I hate saying that, but it's just the way the YouTube algorithm works here. So first of all, let's get into the silver price here. And it's down it was down like 13% just an hour ago, and now it's down at 14.5%. As you can see here, silver has come down, but you have to see this, because this could be a good thing or it could be a bad thing, because it is at a key level right now. So this is silver here, as you can see, capital.com. But this key level was where it hit, and it hit this on early hours Monday morning. So early hours trading Monday morning, obviously futures running 24/7. It basically hit this level down here, and it hasn't hit that level yet. So even though it's down today, after the past couple of days that we've seen, it's actually been on a rally, and I've been waiting to see what happens with the next big move before I do a live stream on this. And who knows what's going to happen? Like, it is very much 50-50 at this point, but it's at a crucial level here. Like, it could go back up and retest the highs here, or it could break this level. And then, you know, if it breaks this level, guys, I mean, this is a key level right here. It's got a lot of air between there and like $65. So it'll be going down significantly if it breaks that level. So it's something to watch, and that may happen as well overnight trading. Now, overnight trading, obviously, that is when you get a lot of market manipulation. And I saw in the last live stream we did, a lot of people were talking about market manipulation in the comments. Market manipulation isn't just contained to precious metals. It's absolutely everything. I mean, completely everything is manipulated. I mean, by extension, even the S&P is like manipulated by all the passive flows, right? I mean, it's not really it's just open to debate basically on manipulation, but definitely is it manipulated? Of course. And if things are happening in after hours, then yeah, that really shows you what might be going on in the background. But today, I mean, it was just contained to precious metals. On Friday, it's spreading everywhere else. Now you can see the S&P is down. It's not down loads considering how high it is. And even considering where silver is, in fact, let's zoom out a bit. It's still gone up loads even over the past year, essentially. I mean, if we draw, so we are right now on the 6th of February. So if we go all the way back here to February of 2025, I mean, it is up so much even today. So, you know, it has crashed over the past couple of days and the past week, but still it is up year over year, and it's up like 121%. And we're going to get into some of the more historical things as well. So this comes from mining.com. Silver price plunges again as volatility remains high here. It's interesting because they said silver has risen by more than 130% over the past year amid growing demand for the metal from industries as well as investors looking to pile into safe haven assets. And a lot of that has been tied to AI, the demand from industries. So obviously, if the AI bubble implodes, you've got to think what happens to that demand for silver. And obviously that is just inevitable, right? At some point, this AI bubble is going to implode, and it'll be on to the next thing, right? It always is. It's always on to the next thing. You've got to guess where that's going right now, and then you'll make a lot of money. That's always what I'm trying to think about. But China in particularly, this is interesting because it says China in particular saw a massive surge in speculative buying, taken prices on a parabolic run since late 2025, investors elsewhere also built up large positions in precious metals throughout January. And we're going to get onto the COT data, but that is old because it's reporting obviously last Friday for the week prior. So obviously the COT data is actually lagging, but that shows you the positioning of traders essentially. So that's what we'll be getting into. All the retail positions, all the institutional positions, and all the big money positions as well, what's going on, whether they're net long or net short. That's always an interesting thing when you have these massive price fluctuations like you're seeing right now, because often, unfortunately, retail investors get caught on the wrong side of this. So gold margins will rise to 8%. And this was interesting because this actually came out on Friday. CME was raising gold and silver margins after historic price plunge. And if you go back, we were talking about this on Friday as well. Somebody was mentioning Silver Thursday, and we're going to get into more of that as we go on. And I was looking into that as well. But this is really interesting. This is what happened in the 1980s. And let me just go all the way back there so you can see, because it was like a similar run-up. Again, I'm not saying that this is exactly the same today. And full disclosure, I own silver and I'm bullish on it long term. But that doesn't mean I bought into this hype and this massive run-up right now, because I didn't. And neither am I really biased either way. Like if prices rise, I'm not selling my silver essentially unless shit hits the fan. And in that situation, I mean, I just don't wish that happened. So I'll probably be dying with my silver and being buried with it. So that's what I hope anyway. I hope I'm never using my silver. So let me actually go to another chart here, because you got more history in this chart. So we'll go all the way back to the 1980s here. Here we go. So this is the 1980s, just so you can get an idea of the price run-up that was being experienced back then. And, you know, it was very similar as well. You went from, let's call it here, all the way to the top. You were up around 400%, the price. So, you know, from the stable level down here where it was around, what is that, $9.56, it went all the way up to nearly $50 an ounce. And when you read into this as well, I mean, this was a lot of margin buying as well. So the brothers were estimated to hold 1/3 of the entire world supply of silver, and this is back in the 80s, not held by governments. The situations for other prospective purchases of silver was so dire that on March 26, 1980, the jeweler Tiffany's took out an ad in the New York Times condemning the Hunt brothers and stating, "We think it is God, I can't even pronounce that word, for anybody to hoard several billion, yes, $1 billion worth of silver and thus drive the price up so high that others must pay artificially high prices for articles made of silver." So, I mean, this is just really interesting because it goes on here, the climax event. When the price of silver dropped below the minimum margin requirement, they were issued a margin call. Obviously, everybody knows what that is, for $100 million. And back then, just think about how much money that would be today. The Hunts were unable to meet the margin call, and the brothers were facing a potential $1.7 billion loss. And that's a lot of money today. But back in the 1980s, I mean, this is way, way, way more money. The ensuing panic was felt in the financial markets in general, as well as commodities and futures. Many government officials feared that if the Hunts were unable to meet their debts, some large Wall Street brokerage firms and banks might collapse. So that's how bad it could potentially get if you've got big players that are operating in this market. And who knows, right? That could be a very similar situation going on today. None of us know. But it's interesting how they've hiked those margin requirements right now, because that's obviously going to affect those those people that are borrowing loads and loads of money in order to fund their positions. And if they're long, and they're extremely long, when the price goes down, that's when they can get these margin calls happened, and it's potentially what's happening. So let's go to a daily chart just to see what's going on here. And basically, it's really interesting because you look at that. Let me just get rid of some of these things here. If you look at what's going on here, you basically had silver prices. They topped out at $121.57. This is for TVC. And then they bottomed out so far at $71.25. And like I said, they haven't been there since Monday in after hours trading, early Monday morning. So they haven't been there yet, even though the price is tanking today and it's down. As you can see, it's flirting with 15.3% now. So it's down a lot. So this is a key level. If it breaks this, you can see that there is a lot of space. And we're looking at a daily chart. So institutional and Wall Street investors, they're using daily charts. They're not using hourly charts. And there is a lot of space between that and $53. As you can see, there's not really any support there that it can hold on to. Maybe $58 and around 60, but it'll be interesting to see what happens there. But again, it could come up and retest the highs because that is actually what happened during the 1980s as well. And the past doesn't always repeat, but it often rhymes. So that may happen, it may not happen. I mean, when you zoom this chart out, it looks like a double top on certain time frames anyways. But it'll be interesting to see whether it actually holds this price. The interesting thing is, a lot of people have been saying online how basically the bullion dealers are screwing everyone because now if you want to sell your bullion, obviously they were charging these massive premiums on the run up. The premiums have shrank significantly now. And obviously if you want to sell because of the volatility, they're not buying it back at a decent price at all. So that's what people are complaining about online. I've seen that on X. I've seen that on Reddit. And you take a look, it's going for around $84 an ounce coin right now, actually cheaper than bars. And the spot price right now, as you can see, is $74. So it's around a $10 premium right now. And obviously premiums were much higher than that during the run up. And obviously this hasn't just been a thing that's happened in North America. It has been all across the world. There has been a lot of speculation, it seems, in silver. But where it goes, I mean, long term, like I said, I believe in silver. Silver and gold, they're actually the real money when you really think about it. And if something ever goes wrong, silver is the best thing to hold because gold, you can't transact in that. You got no chance. Silver, obviously easier to break down, easier to have in small amounts. So I much prefer it that way. But let's get into the COT data because I always find this interesting. It's kind of esoteric, but basically what it's just telling you is people's positioning, which is always interesting. But this is only reported every Friday, like I said. So this was reported last Friday. So, I mean, obviously that was after the massive sell-off. So it's going to show you something as well. So if you take a look at what's happening here, you've got large speculators that are actually long, you've got small traders that are long, and then you've got commercial positions short. And you've got commercial positions which are short just a little bit more than both the, well, actually, it's about the same. They're short about the same. So there could be a lot of hedging. So there's not like in the COT data and the futures market, it doesn't seem like there's a mass amount of manipulation, at least that you can see in the reported data, of course. And we're going to get into, obviously, potential, if the AI bubble bursts and that all transpires, what could potentially happen as well. We'll take a look at what happened in 2008, because obviously gold and silver are the first thing to get sold when liquidity is needed, because they are the best thing for liquidity. And that's why so many people hold hold it. And in the tumultuous times that we live in today, obviously more and more it's become popular. People have been buying gold and silver, and these things generally snowball, and then you can just have these bubbles that form. And I'm not saying that's the case. We'll only know that after the fact, but certainly prices have crashed since last week. So very interesting. And let's take a look at I think we were looking at the gold COT data. Yeah, let me just check here because I just want to make sure. No, yeah, so the gold COT data is way, way bigger. But basically, that's similar as well. You've got small traders that are long. You've got large speculators that are net long. And then you've got commercial that is net short. And it's near enough about the same amount. It's not like there's massive amounts of differences in the positions because they kind of offset one another, right? It's the brokers basically trying to hedge themselves against the risk so they don't fail like in the 1980s, which may have happened. I don't know if it did. I need to check into all that stuff as well. But it's very interesting that this is now spreading as well, because you didn't see oil that was selling off on Friday, but now you take a look at oil, even oil is coming down. And if we take a look on a daily chart, it's quite a big drop for oil, but it's had a significant run up, but it's been stuck in a range, guys, for a long time. Oil, I always look at oil because that's going to tell you where the global economy is going. Obviously, oil prices are not going to be going down if the economy is doing really well. And when I say the economy, I'm talking about the global economy. Oil prices are just not going to be tanking. And really, they've been stuck around these lows now and not really doing anything for the best part of a couple of years and still nothing going on. If you take a look at gold prices, they're not as near to the lows that were set on Monday, as you can see here. So if you look at Monday, the low was set here around $4,400. You're nowhere near that right now in gold. So that could be maybe a good thing for silver, maybe not. I mean, it's so interesting what is going on. History is being made, and these days and this week that has happened will not be forgotten. It will not be forgotten at all when you've got history that's made, when you have the biggest drop in silver that occurs in 46 years. That's a big deal, and we have to talk about it. And yeah, you take a look at gold here, it's actually not near those lows. So it's not actually at the key level, unlike silver. It's going to be very interesting to see what happens overnight tonight. That's going to be the interesting thing. Is it going to tank overnight? Is it going to find some sort of support and then rally again? That's really going to be the interesting thing. And again, it will be another key level. If silver makes it back up here to $120, I'll again be covering it because this is another key level. Obviously, if it breaks it, could explode, and there's just air, like it could be going up and up and up, just as it's been doing. As it breaks these highs, just goes up and up. I mean, look where it broke this high before at $95, just exploded through $100, came down a bit, but again, just explosive price action. And when you've got stuff like this going on, I mean, there is clearly momentum there. And that is something to note. So I don't always think, just because it's gone down 28%, oh, that means that it's crashing and it's over and it's just going to go down forever. I'm very much 50-50, and my mind's open on the situation in silver right now. And who knows what's going to happen? I mean, anybody telling you it's going to go up or down, they don't know. They don't know in these situations. The volatility is just crazy. But obviously the probabilities, if it's sat at lows of it going down, is higher than it going up. But we'll see what happens. And if it breaks, that's not a good sign. And that's just from a technical perspective as well. And then basically you've got Bitcoin as well, which is down. Somebody's chatting about that in the comments as well. This has been tanking. But I mean, the stuff that has been going on with Bitcoin, with MicroStrategy, and just all these Bitcoin, what do they call them? Bitcoin Treasury companies that have been buying Bitcoin on margin, just inflating the price. And really nobody, absolutely nobody knows the true value of Bitcoin. They just don't. Anybody claiming that they know the true value of Bitcoin, they don't. As a payment system, I could definitely see where it makes sense, but there's actually better cryptos than Bitcoin for the payment systems. So just holding it for that doesn't make sense either. But, you know, Bitcoin is still worth $65,000, which I think is crazy. But it was down year over year. It finished the year last year in 2025 actually down year over year. And it's tanking quite hard today, down 10%. But you've had so much speculation. And again, that's kind of very similar parallels to what happened with Silver Thursday. I mean, I don't know off the top of my head. Maybe one of you guys knows in the comments. I'll keep an eye out. But how much Bitcoin do these Bitcoin treasury companies own of the total supply? Is it significant? Is it not? And then obviously, if that all comes to market at once as well, what is that going to do? Is that going to push the price down to, you know, 20,000? Who knows, right? With cryptocurrencies, I'm not against them, but I just think that, in fact, I'm for cryptocurrencies in a way. I just don't own them myself, but I'm for crypto because I think the payment systems could be a completely different system to the banking system. You could completely circumvent the banks in an ideal world, but we don't live in an ideal world. So there's no point thinking like that. And at the moment, like, I mean, heaven forbid that you try and withdraw crypto in places like Canada or the UK or the United States. Your bank might close your account. They might freeze your account. So, you know, this is not something that makes your life easier to transact in, at least right now. Obviously, things could actually change in the future. So it's really interesting. Somebody put Fed still printing billions. Yeah, central banks. I mean, you basically got governments all over the world that are still printing billions of dollars, and they're still just at massive deficits. So all this money is going into the money supply. But it's really interesting when you think of silver prices from the perspective of like a money supply, let's say for silver. It's interesting to think that way because if somebody is obviously on margin lots, that increases the money supply, the available money to go and buy silver if brokers are really easy. And brokers have become, it's interesting because I said on the last live stream that I was talking to a buddy because my broker, they actually just changed all the spreads for commodities. And this was a couple of weeks ago. And like I said on that, I was saying that this is similar to what happened in 2020 when the markets were selling off. So, you know, I didn't see that as a good thing. And we were talking about it. And now you take a look at what's happening and it's kind of like, yeah. So you did actually see the lending kind of tighten up because my broker allows insane margin to people who want it, but it's just absolutely crazy. And inflation won't stop. Tariffs are useless. The U.S. won't regain control. Just looking at the comments now to see what's going on. I knew there is a recession. This proves it. And yeah, it is true. When you see silver and gold selling off in a panic and then there's a broader market sell-off, then yeah, that really kind of goes together. Interesting. Let's check out the dollar actually, because I haven't brought that up because that was up earlier. I mean, it's up slightly. It has recovered from down. What are we on? A 4-hour chart? Switch to a daily. I mean, it hasn't increased significantly, but the dollar is another sign. The fact that it's up when everything else is down, that's telling you that the dollar isn't dead like everyone would have you believe. You've also got things like TLT, which is long bonds that are actually up. And I mean, that's not telling you that there's going to be loads of inflation, because if there's a financial crisis or there's a major correction in the stock market, that affects like everybody everybody's purchasing power because everybody in Canada, in the United States, like pretty much all countries, so many people are invested in US markets. So when they go down, people don't feel that wealth effect anymore, and they tend to spend less money, which then translates into a worse economy. So it's interesting to think about. There was something, oh yeah, currencies. That's what I just wanted to check. I just wanted to check what was going on. The Canadian US dollar pretty much flat, and the pound versus the euro, don't care about that. US dollar pound, so I mean, yeah, it's gaining heavily actually on other currencies. If you just move away the Canadian dollar there, it's up nearly 1%, 0.77% against the pound there. So it has strengthened. It might just be the euro that is actually keeping the DXY down. Obviously, the euro has been insanely strong since Trump got in last year. And even government bonds in Canada are being affected by what's going on with this sell-off. And they will be. That's because, you know, central banks in countries, even the Bank of Canada said it, the Federal Reserve is more central to the central banking universe than they are. I mean, that's the truth of the matter. And even the central banks, they don't play as central role as everybody is led to believe. It's actually they more are just following behind all these markets. So it's very interesting what's going on. So we'll continue to see what unfolds here in the markets over the next couple of days. I'll continue to cover it on this channel. I want to thank you so much for watching this video. If you've enjoyed this video, please check out this video here. Thanks so much for being on the live stream. See you in the next one. Take care.